Good morning. Today is September 18th, 2025, and what a day was yesterday. First of all, the Bank of Canada made news, and also there was some other news in other events as well, and what we are going to anticipate in the next few months, and also about our industry as well. Let's get the ball rolling. So first of all, the TSX closed at 0.02, means there's a little to no change across the board because of the rate cut. Usually that's how things work. Anticipation always fuels more than the actual event. The losers were yesterday were tech by big time, energy, industrials, real estate staples. Winners were communication services, healthcare, consumer discretionary, and financials. So it was basically saying we're done with the news of the rate cut. Now let's look forward to the next big thing. I'll get to that. Let's talk about bond yields. So the bond yields for 2 years came to 2.49, is minus 1 basis point, pretty much no change. 5-year 2.74, went up by 3 basis points. The 10-year 3.17, went up by 2 basis points. Again, it did go up by a bit, but it's negligible. It doesn't mean much, and I do anticipate on seeing fixed rate mortgages coming down, if not already in the next 2 to 4 weeks. Today I want to focus on Durham region. So first of all, the asset sale ratio is about 1.02 for the last week, so which means $1 million sold, listed for 1 million, sold for 1,020,000, so $20,000 over asking. Again, compared to previous years, that's super normal and super calm right now. Average sale prices are on $946,000, which is above went above 1% from the previous week. The listings to sales ratio is my personal favorite indicator, which is around 25%. That basically means it's still a buyer's market, but compared to York region and Peel region, it's a lot better. So let's see what happens, next week after the rate cuts announced, right? So new listings are up by 6% week over week, but it's down 12% year over year. And then my newest favorite indicator is the power sales. There's only 3 power sales in all of Durham region for the time being of this recording. So again, I think Durham is going the right direction, and I do anticipate more people wanting to move to Durham. So that's a good sign that things are going in the positive direction. Now let's talk about the rate cut and the news behind it, right? So the Bank of Canada did cut by 25 basis points to the new rate of 2.5%, and it's the first time since March of this year, and it's because of weaker jobs and trade drag, which we all know, right? And the Feds also in the United States, they did cut by 25 basis points as well, so from 4.25 to 4%. But here's the thing, the dot plot anticipates there's going to be 2 more aggressive rate cuts in the United States. So this means for both Canadians and Americans alike, variable mortgages are going to be more affordable in the near future, but fixed mortgages are not too far off. Now the rate cuts are done, rate announcements. Now let's talk about the CUSMA deal, right? This is the next biggest thing that Canadians are going to talk about, and it's going to affect us. So now the United States and Canada, they are going into study to see how the United States wants to get a better deal. But here's the twist though, many Canadian exporters can actually dodge Trump's 35% tariffs already if they prove it's CUSMA-compliant. That means meeting rules for origin of 60 to 75% North American content, and if they have it aiming to paperwork to show that. And RBC does estimate 86% of Canadian exports do qualify for tax-free entry into these exemptions. And officials say 75% of border trade already is clearing duty-free. So it's a lot of noise, but the reality is there's not much substance to it, because the 35% tariffs on Canadian goods is only on, if based on this data, it's only on 15% of the content of the goods. So I'm not sure if there's a lot of things to worry about, but obviously after they do change the rules, or in understanding after the study of 45 days, we'll see where we stand. But this is what everyone is anticipating and is anxious to see. The other thing I want to talk about is I went to a trade CMP, the Canadian Mortgage Summit in Toronto, and it was a room filled with private lenders, mix, appraisal firms, B-side lenders, alternative lending, and there was panels and AI workshops, and there was a bunch of different things that made us become better lenders and brokers alike. So I would like to say that, one thing that we did get information on is we are getting into AI, and automation can cut down the work hours by at least 10 hours a week. And also, there's the economic panel say there's going to be flagged risk for slow growth in 2026. So these are things that we are looking at, especially as equity-based lenders. And the other thing is AI is going to become a big part of the qualifying process as well. So which means it's not the thing of income qualifying, but it's like the whole presence of the portfolio of our portfolio as well, like of the loans we have, the mortgages we have out there, but also as a borrower, your portfolio as well. So these are things that I learned today, which was phenomenal for me, because I always believe in continuous education, and I was able to meet with like-minded people across our industry. And I wish I was able to go to more of these events, and I look forward to going to more of these events in the coming future as well. And keep in mind the CUSMA is the biggest thing next in our roster that we need to talk about. Other than that, I think today is going to be a slow day so far, but let's see what happens. See you guys tomorrow.